It won't happen anytime soon because of the strength of the financial markets and the strength of the economy. I mean, the issue is down the road, bubbles often get created by excessive concentration in one area. We're not seeing that right now. We're seeing a healthy distribution of growth, so no warning signs in the near term for any type of financial crisis.
Alison, as you look at the current environment that we're in, back then you saw certain risk signs, warnings out there. You don't see many of them now, but are there ones that you would be looking for outside of what you said, that the concentrations of certain kind of things happening with price movements? Are there things that really you key on as possible risk or warning factors going forward?
You know, I tend to look at excessive growth in one asset class or one credit type, one type of loan. And then you start hearing stories about, as people continue to all want to be in that lending area, they take on greater and greater risk in that area, but somehow or another say it's a low risk product. We saw that with sort of the whole mortgage business growing and securitization expanding on the mortgage business. But then all of a sudden, everyone wanted to continue to grow at the same pace. So they got into the higher risk loans and said if we package them a certain way, all of a sudden they're AAA credits when they were still very high risk loans. But they did this as a way of putting very little capital against some pretty risky assets. So it's more like when you see bubbles, all of a sudden people think things are risk-free. I mean, think of the internet bubble, and people said you don't need capital. You know, capital is irrelevant, and 1 + 1 = 15. So it's when you start hearing things that don't make sense, or you listen to it and think, oh, it doesn't make a lot of sense, but growth is good, everyone's making good money, and you tend not to question it.
But isn't that kind of the problem, that you often don't see the problems until they're staring you right in the face, and then it's too late? We talked about this earlier in the program with Senators Judd and Bai. So at least let's look at what we did change. When you look at the financial system, we made some changes, regulatory and otherwise. Do you think that the financial system is at least safer than we were 10 years ago? Have we fixed that problem spot?
I think it's a bit safer. Capital ratios are higher, although I do think there's not enough within the capital standards that really would penalize for excessive concentration risk. There's some penalty, but not enough, and concentration tends to be the biggest problem in a lot of these financial crises. I also don't believe the living will plans are really going to be that effective. In the midst of a crisis, you're not going to be able to have a disorderly disposition of your assets if you're a problem financial institution. If the regulators come to you a little early and you start doing that, you're going to set off a panic because people think, oh no, this company's really mark to market failing. So I worry about the living will and think there should be more pressure on banks to be a little bit smaller and separating out their sort of government subsidized deposit bases from proprietary risk-taking activities.
Alison, is there a chance that that would actually happen, that we would see in the United States the investment banking side of things separated from commercial banks, that one-stop shopping model go away?
Not in this administration with current government regime. I think that's, if anything, there's a trend now towards deregulation and loosening things up with the banks, not becoming stricter and separating some of those businesses.